I will now explain to you how we post certain journals to the general ledger. How do we know what to do in every single ledger? Okay, we start with the cash receipts journal, or better known as the CRJ by most of you. Now, firstly we look at the main column. This is a main column which is bank. Okay, we're receiving money, so the bank becomes more. The assets become more, so bank will be debited. All the other accounts will be credited, except for cost of sales. Okay, now how it works is, if you put bricks on a lorry, and you put 23,000 kilograms on the one side, then you must also put 23,000 kilograms on the other side. Otherwise, this lorry will topple over or will tip over. Okay, so it's important that you know that you must balance accounts. You must have the same amount on both sides, on the left hand side and on the right hand side. Okay, so this 23,000, that includes 11, 10,000 and the 1,200. Why doesn't it include the cost of sales over here? The reason for that is that cost of sales is already included in the 10,000, so you don't want to count it twice. You only want to count it once, and that is why this will not be credited like all the other accounts. Okay, here cost of sales will be debited and trading stock will be credited. When you see cost of sales, you always know that trading stock will go together with it. Cost of sales will be debited, and if you see a cost of sales account, you know trading stock will go together with it. The next one is the cash payments journal. Always when you buy stuff, when you buy something, cash, the first column, the main column over here. Okay, I'm just going to write it here. Main column is bank. So bank will be credited because the asset becomes less. All the other accounts will be debited. All these amounts, if you add all of these other amounts together, you will get the 24,000, just to focus again on the principle which I explained in the CRJ. Okay, so when you buy things, the first column will be credited and all the other columns will be debited. And the first column, the main column, is the bank. Okay, let's go to the next part, which is the Creditors Journal. Now, in the Creditors Journal, we are also buying, but we are buying on credit. The first column will again be credited and all the other columns will be debited. But the reason why the first column is credited is because creditors control is a liability and we are buying on credit. That means we are owing more money. That is why the first column is credited. If we add all the other totals together, we will get the 14,000. The petty cash journal is our next journal. We're buying again, buying cash. The main column is the first one. That is the main column, which is, in this case, petty cash. So petty cash is credited because the asset petty cash becomes less and all the other accounts will be debited. Again, if you add the total of the sundry accounts plus all the other accounts over here, we will get the amount, the 95 of the petty cash. The next account that we're going to look at, or next journal that we're going to look at, is the Debtors Journal. Now, the Debtors Journal is where we are selling on credit. If you are selling on credit, your debtors increases. Debtors is assets. Now, normally, or in this case, debtors then become, or the assets become more because the debtors control, the amount that people owe you becomes more. You are selling to people. So sales is owner's equity and that makes the money of the business more. That's why it's credited. What were you selling? Remember, you were selling those two transactions or those two accounts goes together. Then again, what were you selling? You were selling trading stock. If you're selling trading stock, your trading stock, which is an asset, in this case, becomes less because you are selling trading stock. Cost of sales is owner's equity. Cost of sales is an owner's equity account, and it makes the money of the business less. That is why we debit cost of sales, because a cost makes the money of the business less. Okay, let's go over to the debtors allowances journal. Now that is the total opposite of the debtors journal, because in this case where you sold on credit and the people owe you money, we are giving discount to these debtors, the people that owe you money. That means where the debtors control became more because you sold to them in the DJ, you're giving this guy discount now, and that is why he owes you less. So the debtors control will be credited because the asset becomes less. Debtors allowances is an expense. Debtors allowance is an expense. They are owing you less money. That is why we are debiting. It's expense to you because we are losing money in the process as a business. Okay. Now the thing is, this guy who bought from you brought the trading stock back. So the trading stock will be debited because the asset, trading stock, becomes more. The cost of sales will be credited because an income, in this case, is created. What happened here? It's a reverse transaction. Here we sold the trading stock, and here the trading stock is brought back. We all know when it's cost of sales, trading stock goes together with it. When it's cost of sales, trading stock goes together with it. But in this case, it is a reverse transaction where cost of sales is debited here, it will be credited in this case. The last journal that we're going to look at is the Creditors Allowances Journal. This again is the opposite of the Creditors Journal. Let me just show you. In the Creditors Journal we bought on credit, so creditors control, which is a liability, became more. In this case, this creditor is giving us discount. That means the liability becomes less because we are owing this person that we bought from less, and all the other accounts will be debited. That is all from my side with regards to the journals and how you take them to, how you post them to the general ledger.